JB here. Hope everyone's doing outstanding. Monday, April 28th, 8:54 a.m. on this fine morning. Talk quick about the market. Some names looking at go from there. S&P futures are pretty much flat here, or they're mixed, slightly in the green now, but not too much in the way of change. We're off the lows of overnight, or the SPY was down at 547. Big week, right? On the heels of last week's action. I mean, I was doing a rant last Monday, pretty much at this time, and futures were gapping lower, and it just felt like, okay, this might be the day where uh, markets could really tumble. And then there was a melt off right after the bell rang, and the markets all the way till 2 o'clock hit lows of the day. And you thought, and we're down to 508, 509 on the SPY. You thought, well, I mean, 481 looks like we might hit it this week. Got a bounce in the afternoon, and then the rest is history. And the market's been on a rally with the S&P rallying nearly 5% for the rest of the week. Pretty much off, I think it's 8 or 9% off the lows. And now you start looking at some of these charts, and Monday midday, it looked like carnage was coming, and now you say, wow, there's some constructive setups here with the 50-day moving average on the SPY is only 561. Amount of stocks trading near there or getting over that 50-day, the 200-day moving average are trending in the right direction. Yields are dropping. The dollar's a little stronger. So all these stories that were going on over the last 2 weeks seem to at least maybe they're taking a pause, right? I mean, hopefully we're kind of got out of all the possible uh, the worst case scenarios for the market, which no deal, Powell getting fired, uh, you know, no pause, like all these things, these worst case scenarios, and those are starting to get removed. And now we need some trade deals, right? So already talks that supposedly maybe it's the first one's gonna be India, Japan, maybe it's South Korea. Somewhat Vietnam, who knows? And then you still have that back and forth with China, and President Xi still says that there's been no contact with the U.S. and China in regards to trade talks. I mean, there's other reports that say there's been trade delegation from China. Who knows, right? I don't have boots on the ground to see exactly what's going on, but for now, markets are holding up. I think like this is the week. Huge data. So you have GDP data Wednesday's first quarter estimates are 0.4%, somewhere in there. Last quarter was 2.4%. So I would think it's possibly going to be a little bit better than that. I think some of the data coming from, especially from April, is going to be stronger than expectations. And then if next month and next quarter might be a little iffy, right? Second quarter data. We also have some manufacturing data, right? I think the first read for April, that's on Thursday. We have PCE data on Wednesday, which I mean, so late in the month. It's for it's March data, and we've already got all the inflation data, so I don't know if that's going to move markets much. And then at the end of the week, Friday, we get the unemployment, we get the jobless claims for April. That'll be a big number. But again, I mean, last jobs report, everybody was talking about the government layoffs and all the impacts, and it came in better than expected with the government sector actually doing better. So, we'll take everything with a grain of salt. I still remain, I don't have bullhorns on, thinking we're gonna, get over the 50-day moving average and hit new all-time highs in a matter of a couple months. I, I, I'm cautiously optimistic that we'll have some better trading ranges. The market will find some footing, and then if we get some positive outcomes, then I could start getting more convicted. Because, I was saying with that tariff situation when they came out with that poster a couple weeks ago. And I mean, that surprised me. And then when they didn't have any deals and they start ratcheting up these tariffs on China, that kind of surprised me too. And, and then you have all this uncertainty, and then you start going after saying you're going to fire Fed Chair Powell to add just another, possible uncertain event that would, to me, would be just worse. That would also be a worst case scenario. So those kind of surprised me. So I would be surprised to see some more headlines. And I mean, that's what even on Friday afternoon, POTUS was talking at like 2 o'clock, and it's like 2 hours before option expiration on a Friday, and here he's coming out with comments that are moving the market. I'm like, it gets exhausting after a while. So hopefully, again, the headlines aren't going to be, maybe, as deals get ratcheted out, maybe we can get away from market moving headlines and focus on things that we focused over the last 10, 15 years, which is fundamentals and growth and finding some winners and things like that. All right. So that's kind of the overall market. Last week was 530 and 547 on the SPY. This week, so you look at some levels, and 547 would be nice to hold here today and this week. That'd be great. If not, then you go 545. And I think it's 536 on the downside. Can't rule any of those scenarios out, right? I mean, we're just a news event away from another 2% swing on the S&P. It just That's how it is. And at 561 or so on the SPY, that would be strong resistance. I mean, it would be, in my humble opinion, a very strong accomplishment if the S&P can reclaim its 50-day moving average this week. And then, like I said, there's some good things. U.S. dollars ticking lower. The VIX, down for the 5 sessions last week, and it's near that 25 handle, so a good sign there. And then the amount of stocks trading over there, 200-day moving average up to 35% on the SPY. All right, so that's kind of overall market. So there were still earnings this week. So I think outside the trade deals, if you have Wednesday, we have Meta, Microsoft. So I mean, Meta probably more importantly, but even Microsoft with their cloud side, you want to see Meta talk about the ad business, right, and how that all looks, especially with the possibility that Temu and some of these companies in China are not going to be paying for ad spend in the U.S. because it doesn't make sense for now. And then similarly on Thursday on Amazon, right? So you want to see how their impact is. Nice article, I think UPB shared this morning in regards to companies pulling out of the Prime Day already. So uh, I'm sure Amazon will comment a little bit about Prime Day or if there's some impacts there. And then there was another piece in the Wall Street Journal. It seems like a lot of it's all skewed bearish. Like you have to think, like like if you're a well executing company, you're not going to wait for tariffs to come in for it to impact your business. You got to be forward. You got to look ahead and say, hey, oh my gosh, if tariffs hit, these are some impacts. Let's react now as opposed to be react later, which would not be good for business. So, of course, there's a Wall Street Journal article talking about how these companies are reacting, and it's like to me, you always see companies that cut jobs or whatever, and their stock goes up, and people are, wait a second, why they cut jobs and the stock's going up because the company's being more efficient, right? And sometimes when you cut the fat out, you become a more efficient operating model, right? Better operating business. So I hate to look at the bad side, right? When they cut ads, they cut travel, they cut all these things out, but maybe it cuts the fat out, and then they can add things back if tariffs get ratcheted back or what have you. So obviously, there's an impact when there's people who get terminated, got to find a job that takes spending out of the economy, things like that. But there's always two sides to the argument. All right, so that's kind of earnings this week, and there's a lot of names I'll be looking at too, because some of the names, I like, and I'll talk about that in a second. But really quick, so just some names last week, and obviously Restoration Hardware has been a monster over the last couple of weeks for some bounce plays. I didn't want to be in a spot where the CEO at some point announces something, whether it be a buyback, a special divvy, or not to mention if there is some kind of deal ratchet out with China or Vietnam. I think RH it will be up 15, 20% from where it is. So added some spec calls into this week. Uh, I really like it. You look and there's a gap, right? Gap of 220 and change. I mean, that'd be phenomenal if it gets up there, but I wouldn't be surprised to see if it does, whether it be this week or next week. That's RH. Chipotle, great trade after earnings. Locked some of the calls in on Thursday for 100%. Held the rest into Friday and then went on another rally, hitting 52 in the afternoon. I think it trades up near 54 this week. And Domino's reported earnings this week. This morning, I don't know if it was. I have to take a look. Didn't look like the stock was moving. Do they? I think they had earnings. But like this one, only have a few left, some few runners. I'm just going to hold for that possible 54 tap if that happens. My calls are so inexpensive, I'll just hold them. And then I'd added some ROKU strikes. And I was talking about last week when I got the calls, the premiums for the weeklies and then the monthlies were very similar. So you're not paying much extra to hold for 2 more weeks. So I went and got the monthly strikes. This morning you had Wedbush coming out just lowering their price target to 100, I think from 125, keeping their outperform rating. If you don't forget, I mean, Roku, the stock back in the middle of February, all the way up over 100. I think it hit 104 after earnings. And then it was monster earnings, monster beating rate. And then the stock just melted all the way down under 55. Some of it, people think there's a recession. People think we're in a recession right now. And if that's the case, ad spend goes down, not good for Roku. I don't think that's the case, but market thinks otherwise. I would love to hold freebies and ride the rest into earnings. That's kind of the game plan. If I'm not able to do that, I might lock them all in and revisit. I don't think that'll be a possibility. I'm hoping that doesn't happen, but if it does, that's probably what I'm going to do. But really like this one. You take a look, it's 50 and 200-day moving average again, so tight together, 73.08 and 72.40. So that'll be a big spot. I think it trades over $70 this week before earnings. And then other names, obviously GameStop, premium's still coming out, but hopefully maybe this is the week, the calm before the storm. It's been chopping between 26 and 27 for the last 2 weeks. Just waiting for an update. I mean, Strategy just announced more Bitcoin purchases. So you got to think at some point, especially As Bitcoin starts, it's been melting higher. I was only up 1.2% last week, but you have to think that GameStop's going to have some kind of announcement. When that happens, I think it trades into the mid 30s. And then XYZ, Block, Square. It's a name I traded back in December. I think back in November, December, and January. Another name that's just been beaten up. A lot of it, maybe I guess recessionary concerns. It's right near its 50-day moving average at $60. It reports earnings Thursday after the close. You also have PayPal reporting tomorrow morning. So if they have a strong result, maybe that kind of has a read through for XYZ, and that one can run in sympathy. Premiums are somewhat elevated, but I was looking 66 or 70, 67 weeklies. Get some for premium build, hold them, lock some in or lock all of them in, depending on where it goes. If I can lock some in to cover costs, I'll ride the rest into earnings. But like this one, um, still holding my GPCR. Solid week last week, holding that huge move that it had after Johnson & Johnson canceled their study and Pfizer announced positive data. I think that's it. I'm trying to look at some of these other things. I keep looking at gold as a possible setting up for you know, I hate to always look at, but if things kind of settle down, you have to think folks may panic sell gold, right? Because it was panic bought. Um, and I always make that joke, right? It's like the people, the Peter Schiffs of the world who are last week and the week before gets and does these little live streams that the U.S. He always says it. The U.S. economy's garbage, the inflation, the dollar, everything's garbage. Buy golds, whatever. You have to think some of that might panic. That panic might come out, right? So don't be surprised as if I do get some GLD puts or somebody maybe possibly some of the miners. Um, and then last but not least, like I said, we're a headline away from being down 5% one day, right? As crazy as that sounds, that's still the environment we're in. So if things do get crazy, if we break some support, maybe 545 on a SPY, don't be surprised if I get some inexpensive SQQQ calls as a hedge, right? Because when you have a hedge on, and the hedge can make you money too, but it allows you to nibble on some bounce plays where instead of this way you don't lose your butt, right? So all right, that's it. Let's have a great day. I'll be back on audio later. Rock and roll.